G'day all, it's Adam here from Highview Accounting and Financial. Back to you with a bit more information regarding the JobKeeper payment. Just trying to tick some boxes off with the frequently asked questions. Obviously, we're getting pretty inundated at the moment with queries. It's very confusing legislation that's been passed. There's a lot more still happening. A lot more we're still actually learning about as well. So we thought best thing we possibly do is give you guys a video to explain what we do know, cover off some of these questions that everyone's a bit unsure about, and sort of tick off those boxes for you as best as we can. If you do have any more questions after this video, please don't be afraid to hit us up in a comment below, or alternatively shoot an email to your accountant and they'll do your best to help you out. Unfortunately, there is information that's still being released by the ATO. It's coming through in drips and jabs, and it's coming from all sources. So we'll do the best we can. However, hopefully this video will help you out a little bit in the short run anyway. First and foremost, there's one huge question we keep getting asked, and it's a very common question, that is, do you need to pay super on the JobKeeper payment? Obviously, it's a pretty good question to ask because, you know, employers, especially employers that have completely shut down, they don't want to be paying money out for, you know, their employees when they're not even there in the first place. So the legislation has been written that if you're receiving a JobKeeper payment and you are topping that up to your employee, so you're giving that payment to the employee without them actually giving off any physical exertion, then that payment is exempt from superannuation. Well, the employer can have the choice of whether or not they want to pay super for it. So to give you an example, if you have an employee that is earning $200 a week and you have to top them up to $750 a week, that $550 gap is exempt from superannuation. Now, alternatively, if you have an employee that's still working, still earning a good amount of money, you know, let's say he's earning $1,000 a week right now, and they're actually doing work to receive that income, then they are still eligible for their superannuation for that full period, for that full $1,000. All right, guys. Another common question that we're getting a lot from our clients is, can the employer pick and choose which of their employees they want to be eligible to receive the JobKeeper payment, thereby electing which of their employees are actually going to receive the benefit and which of the other employees will not? We've got a bit of clarity about this, and the answer is it's a one-in, all-in situation. So you cannot pick and choose which of your employees are going to receive the benefit. If they're an eligible employee and you intend to claim the benefit as an organisation, then all employees that are eligible must receive the benefit. Obviously ineligible employees are disregarded from this situation. But just as a bit of an example, if you had a partnership and you had a casual employee, you know, and then you want to receive that benefit as partner to the partnership, you cannot get that benefit yourself, but not also give the benefit to that employee. You must both get that benefit. All right, guys, next question that we're getting a fair bit as well is, do we need to deduct pay-as-you-go withholding from our JobKeeper top-up payments? The simple answer is yes. It is a form of wages and salaries, and it will be taxed at the individual's marginal tax rates, which will usually be calculated using your tax payroll software. So you will need to be withholding that money, but obviously the beauty of that at the moment is we have the cash flow assistance package that's been provided by the government as well, which will reimburse a portion of that wage withholding, potentially up to 100% of it, depending on your circumstances individually. Another question that we have is, how will the JobKeeper package payments that we receive as an employer be treated in the hands of the ATO? Now, we have clarity that it is going to be treated as assessable income, so it will be a taxable income. However, obviously, you will have the contra side of it being the wages that you paid. So you'll have $1,500 JobKeeper payment, but then you'll also have paid that wage of $1,500, basically knocking each other out. So, you know, now that you know that you're an eligible employer, now that you know that you'll be on the JobKeeper payment and you're going to start making payments to your employees, obviously the next step for a lot of people is, okay, how do I actually process that payment within my payroll software? You know, for instance, Xero or QuickBooks or MyOb. They're all individually building this into their platform currently, and so we're still waiting a bit more clarity on it. However, the workaround that we've found that works quite successfully at the moment is to establish a new pay item within your software. So for instance, Xero, you know, you set up a new pay item and you'll call that a JobKeeper allowance. Now that allowance is going to be reportable as W1 on your activity statement. It will be exempt from superannuation, but you will have to have pay-as-you-go withholding taken off that amount. Now, this only applies to payments that are a top-up. If your employee is still working and receiving that $1,500 a fortnight through their personal exertion, then you pay them as their ordinary means. However, if it's a top up, so they earn, $1,000 a fortnight and you're topping them up to by $500 more, you only put that $500 extra under that allowance payout. The question we're getting is how do newly established businesses or businesses that are in a growth stage apply for the JobKeeper payment when they don't have a reasonable comparable figures from prior year? As one of the turnover tests is that they all do rely on your 2019 financial figures for a period, and they want to compare them against the 2020 financial year. But for some businesses, they may have started in January last year and had very low income, and that's obviously sizably grown as they've grown their business. Now, the ATO are currently working on guidelines and testing methods for businesses in this circumstance. However, the ATO has said they will provide discretion for businesses within that circumstance to basically self-assess, say, yep, we've definitely been impacted by it, but at the same time, you need to be able to prove that your turnover has genuinely dropped by 30%. Otherwise, they may come knock on your door and ask more questions. So definitely keep records of this as best you can. However, as long as you can prove that you've met that 30% reduction in some reasonable fashion, we suspect that you will be eligible for the JobKeeper payment. Next question we get a lot is, can an employer receive both the apprenticeship and trainee rebate that's provided by the boards alongside the JobKeeper payment that the government is currently providing? The short answer is no. You only get one or the other. Now, it's a bit particular in that if you are on the apprenticeship rebate scheme currently, you can receive that benefit for the period of 1st of January till 31st of March, and then opt to switch over to the JobKeeper payment for those employees from the 1st of April onwards. Now, the JobKeeper payment is for 6 months and the apprenticeship payment is for 9 months, but they do both end at 30th of September. So obviously you'll need to review each of your circumstances and see which one is the better option for yourself to opt in or out of. Another question we get quite often is, what happens if you're a family business or just a small business in general and you receive your remuneration from your employment in a different form of payment rather than wages? So for example, if you're in a company and you receive remuneration in the form of dividends, or if you're in a trust, you receive your remuneration in the form of trust distributions, or if you're in a partnership and you receive your remuneration through partnership distributions. In these instances, you are not eligible as an employee to receive the JobKeeper payment. You do still apply. However, only one of the actively engaged individuals that are either directors or the trustees or the partners can get the benefit. So if you've got a two-partner entity, only one partner will get the benefit. If it's multiple trustees in a trust, only one trust will get. So one beneficiary will get it, and likewise with directors in a company. We're still receiving more detail on this and the eligibility requirements. So please keep posted with this one. However, that's what we've been given about it so far.